All right, everybody. Part three of this Amazon series of these notes that I got from a high level uh, meeting with upper management of Amazon, what their fears are, what they are concerned with in the economy going on right now that is going to drastically affect their business. If you have not seen parts one and two, I'm going to put them right here. Pause this, go and check those out first because they're done in order. And we're gonna save, I guess, I can't say the best for last. All right, here we go. Dive right in. Auto loans continue to default nationwide without current repossession data being available and accurate. Let me stop right there. That is absolutely true. I have been like bated breath. We have been seeing repo numbers exploding, and we are getting all this information about repo numbers back in September, October, November, and then it seems like radio silence. And I have a weird feeling that the reason why those numbers stopped being reported was because somehow, and I know this is the total conspiracy mind in me. Please let me know in the comments if you agree or what you think about it. I have a feeling that the banks got involved because we've seen before in the past where banks, especially in 2006, 2007, they were not wanting to come out with the amount of loans they were taking, the losses that they were taking with their MBS losses, the mortgage-backed securities, the amount of foreclosures. As a matter of fact, in 2015, 2016, um, oh shoot, you know what? Even no, in 2018, when I was working as a real estate agent, um, trying to really go out there and make it, but I was having such a hard time. The reason why is because we had so many homes in pre-foreclosure because interest rates were moving up, mortgage rates were moving up, and there was a lot of pressure in the real estate market, even here in California. And we were seeing this stuff sort of, it was like shadow inventory. It was the weirdest thing ever because it just one day it just disappeared. And the same thing's going on with cars. So even Amazon's noting that their repossession data being available and accurate, it's not available and accurate. They are out there trying to figure this out because why? It drastically affects the car parts that they sell, the auto accessories they sell, things like that. But also they understand the death to the consumer that's being created with all of these repossessions. So they're actively trying to find this. Now, they also go on to say, we contacted 9 credit unions that offer auto loans, and defaults are hovering between 12 and 14%, with no reports about these defaults in the news. Now, let me stop there. You guys saw that video I did where I went to one of my credit unions and I said, well, the only credit union, I've only got one credit union. And I started asking them about auto default losses as well. And they just looked at me like, "What are you talking about?" And they pointed to this document on the wall, and it was the balance sheet of the bank. Like, "Look, this is how many it literally says assets, liabilities. This is how much we have." It's like, that tells me nothing. I wanna know, and I asked them, "I wanna know what your exposure is to car loans because I know you guys make a ton of car loans. I'd like to see your exposure to, uh, what is it? Mortgages, and I want to see the default rates right now." And they couldn't give me any information. If you work for a bank or a credit union, please email me. Let me know these things. If you've got any data that I could keep, I'm trying to report. I actually want to bring you news that isn't in the news. And so, ninjabrohawk@gmail.com. Please don't ask me for financial advice. I cannot give it. But I want to bring you valuable information. So, ninjabrohawk@gmail.com if you work for one of these banks, because I want to figure this out. But Amazon was able to figure out right here 9 credit unions offering auto loans, and the defaults were hovering between 12 and 14%. And we haven't even seen the real big crunch yet coming in this fall. I believe that you're going to see that number well over double. And when we see that, you are going to see banks screaming back to the Federal Reserve like, we've got to stop this now. We've got to stop the bleeding. Somehow we need help. So again, Amazon's looking into auto loan defaults. They're concerned, and they're really concerned because they can't get the accurate data on the repossessions. Now check this out. Let's go on. Compression in consumer consumption. Single unit dwellers are merging to reduce rents. Isn't that interesting that Amazon cares about how you're renting your home and who you're renting with? So, compression in consumer consumption. Single unit dwellers are merging to reduce rents. Local carpooling services have popped up offering schedule of rides to shop at box stores. Meal sharing and movie theaters are seeing ticket sales with consumers spending the one day watching movies under one ticket. Hold on, I gotta reread that. Meal sharing and movie theaters are seeing ticket sales, with consumers spending the day watching movies under one ticket. I don't understand what that means. Let me know what you think that means in the comment section. But the point being is that they're literally looking at how you spend money at the movie theaters, your discretionary spending. Why? Why would that be? Because they want to figure out an alternative. They want to say, okay, you're having a hard time spending money at the movies, we're going to give you prime movies for less or something like that. They're going to start looking at ways that they could do discounts in their offerings so that they could draw you in, even at a loss leader, right? When in sales, loss leader, when you're literally making nothing on one product, but you're just breaking even, but that product is so alluring. Usually with grocery stores, it's a ribeye steak. That's why the ninja shows up. He's not a vegan, but that is the one thing that gets the ninja in the door, and he's got his wallet. He's like, well, if I'm gonna have a ribeye steak, I might as well have two ribeye steaks. No, I'll take the limit. But also, hey, I'm gonna pick up some vegetables. And I'm gonna pick up, a bottle of Cavassier. I mean, like you see where I'm going with this. That's what Amazon's doing. They're actually looking at how you spend money in your off time and how many people are seeing that they really just don't have any discretionary spending. That's the wild case. And I got to be honest with you, this gets me excited because this means as we all together get prepared, we're saving up cash, we're getting out of debt, we're literally holding cash off to the side too. It's called dry powder. We refer to it as dry powder. Why? Because we need to fire off that shot because there's a smoking deal. Some store's going out of business. You could buy up all that inventory and then sell it to someone else for more. You need to be able to do it, and there's a smoking deal in real estate, autos, things like that. And I'm not joking. I'm thinking big. As Amazon's trying to just literally save its business, I'm like going, I want collector cars. I want my Mickey Mantle 52 Topps rookie card. I want my Michael Jordan rookie card. I want, art that's, at one point was not touchable. It's going to be very touchable pretty soon. So point being is that I'm thinking big. As Amazon's going into panic mode, you and I should be going into like, yes, we're going to crush this thing. All right. Okay. Let's do this. Well, how much time? You know what? Let me cut this video short. I'll do a fourth part because I can't have these videos too long. And then we'll bring up, they're actually going to talk about Facebook Marketplace and they're going to talk about shrinkflation. So let's bring this to video 4 and I'll talk to you in a second, guys. The Economic Ninja is out.